The COVID-19 pandemic to political turmoil and job losses at a historically high rate. Despite all of that, the stock market has continued to grow. Some of the nation's top investors have cautioned the market is in a potential bubble. Mike Reeves of Strategic Wealth Designers joining us now to discuss that. First off, good morning to you, Mike.
Good morning, Scott. How are you doing?
I'm doing well. All right, so is the stock market. We just talked about a bubble. For those who don't know, what does that mean?
So a bubble it's really saying that things are stretched, that that valuations are so high, if something changed quickly, it could cause a lot of problems like popping a bubble, very sudden, very damaging to the stock market. And what you're seeing out there, really concerned in the bond market, stock prices, they're high, that bubble's in our neighborhood, but probably not knocking on the door yet. The Federal Reserve, they're saying, hey, bring on inflation. That's increasing the price of all assets. You got low interest rates, government's handing out money. It's pushing stock prices up. And with some other vaccines to come, a reopening trade to come, stocks are priced for perfection right now.
So when will this possibly reverse? I mean, sooner or later, you got to think this is going to have an impact on the country.
Yeah, as far as things going on in Washington, that historically, those things don't affect the stock market until they change fiscal policy, until they change the fundamentals of the economy. Give an example, if they raise taxes by 10%, stocks trade on corporate earnings, and corporate earnings would fall 10%. That certainly would change the stock market. As far as these other factors, when we're this high, when valuations are this high historically, you should be looking for a fall of 10 to 20% in the stock market at any time.
All right, so for investors with that news, 2020 is a wild year. Many ultimately ended up in the green. We're talking about stocks, equities, everything, bonds. What's your advice for 2021?
Well, for 2021, you want to be careful with certain asset classes. They're incredibly stretched, and that certainly would be the bond market. For folks that are within 10 years of retirement or already retired, protecting some of that money, using things that when the stock market falls, they're protected, places where you could get income if the stock market was down without selling your stocks, and just having a more blended approach. Interest rates are super low. They're starting to rise now. And if they rose aggressively, that's, it's bad for the bond market, but then eventually it'll be bad for stocks.
All right, you kind of touched on retirement. Anything else you want to talk about that regarding, because I know a lot of people are close to it or they're planning for it?
Well, the young people out there, when we do have that stock market correction, that's just an opportunity to buy more for less. But if you are in retirement, you want to make sure that you're not getting carried away with, Google going up or Facebook, watching this stuff day to day. You want a well-blended approach where you're using multiple asset classes, different tools that protect you if the stock market finally pops. And then, the thing that I'm more concerned about, if it goes down and stays down for a longer period of time. We've had a great run here. You want to protect your retirement assets.
All right. Mike Reeves of Strategic Wealth Designers. Mike, thanks for being here as usual. We appreciate it.
I appreciate you having me.